Hello and welcome, fellow real estate enthusiasts. My name's Luke Smith, and today I'd like to talk about buying vacant land. I have bought thousands of vacant properties over time all across the country, buy them, sell them, market them, split them, figure them out one way or another, turn them into a useful asset and make them happen, right? And so I get a lot of questions, lots and lots of questions along the way. Luke, how do you do this? Why do you do this? And things. And one of the ways I've felt that it's best to answer a lot of those questions is to share my stories. I like to tell stories, but I like to share what I'm doing. So today, I'd like to share mailers. In the past, I've made numerous videos in the past about mailers, making mailers, strategizing how to make mailers. A lot of people say thank you for those videos. They learned a lot, and they give me pointers. They say, Luke, why don't you do this? Why don't you do that? You could be better if you did this. So if you have those kinds of comments, throw them in the comments below. It'd be much appreciated. I learn from you guys just as much as hopefully you learn from me, and it's a two-way street, right? And so I've been doing mailers like this since 2016, and I've done, I can't even count them all, how many mailers, 2 million, over 2 million mailers of direct mail. And so some people say it doesn't work, it's bad, it's wrong, or it works, or whatever. I mean, I know it works. I have seen lots of deals come through over time, whatever you say or believe or whatever. I've got all kinds of data to back it up if you really want me to. So I don't question that anymore. It's about what works the best, in my opinion. What works the best? What's the most opportune? What's the best way to do this going forward? And there's lots of ways, and I'm testing lots of different ways. I like to test lots of things along the way and learn and customize from there. And so today I believe this is retreading back to things I've done well in the past. And the markets have changed. So the markets have changed, and just like life changes, things change, markets change. In the past, it was all kinds of properties. Didn't matter what you had, you could sell it, especially during COVID times. You could sell anything. But you don't want to get stuck with them and the music stops, right? So a lot of them are a lot better to sell or to have if they've got quality, better quality. And uncertain times like we have now, it's a reversion to quality. I think we go to quality, and quality comes out the other end a lot better and faster, easier. Later on, we can go after the more marginal stuff. But in today's market, I think we should be going after quality. So what's the quality? Where do we find the quality? How do we distill that from all the other places we could be working? And how do we get to that the fastest? There's lots of different versions of quality, but looking at a lot of the trade that's happening in today's market, I'm seeing quality in hobby farms. And so I'd like to focus in on hobby farms today. And Luke, what's a hobby farm? I'm asking myself questions for your benefit here. A hobby farm, in my definition, is something that's not big enough to be economic as a farming operation. Like, you're not going to go plant corn as far as you can see on one of these things and pay the bills by picking the corn or the wheat or the, some, massive scale agriculture. Maybe you make economics off of growing microgreens and awesome greenhouses on one of these size properties or something more specific, like lotus flowers for a specific restaurant's dish that they want to serve. I mean, like, you could get more specific and make economics out of these, but generally they're hobby farms. And so they're generally in a distance to a job somewhere where somebody could drive and go get to a meeting at their work. Like, they're working remotely probably most of the time, but still going to the office sometimes. They want to be in range of supplies and stuff like that. So not totally rural, but not downtown either. So somewhere in between town and totally rural. And I'll keep asking myself questions because I don't know how else to say it. Is, Luke, how do you know that? How do you see that? And so what I want to do today is I want to jump into a couple different data sets and try to share visually and spatially and verbally how I'm seeing this, and see if I can convey the message over. And because I have theories and I have ideas, and then I go test them and I learn something because the data shows me something else. I'm like, Why is it this way? How is it that way? And the data teaches, and the data I learned from data, and that's a passion of mine. So if you follow along, let's see what we learned today. So my theory, so I was just talking about theory. I wrote down a little bit of a checklist, hit list, order of what to do here. So the theory that I was presenting is that it's hobby farms that are happening. I think part of the theory, seeing the data and thinking about it, is it's harder to finance properties right now. It's harder to buy the supplies to build them. It's harder to get the labor to build them. It's harder to pull off building stuff. And so a year ago, we did this study. I think you'll see a lot more trade in the smaller, like a quarter acre, half an acre, 1 acre kinds of properties. Like a house goes here, it's got the driveway, it's got the utilities, it's got a bulldozed pad, it's ready to go. Let's build a house here tomorrow kinds of properties. I don't see those going through the market in volume right now. I mean, I'm sure there's exceptions, but I don't see them across the board happening in any of the markets I've really looked at. Because I don't think the builders are snapping those up and building. And I think the sellers are waiting for higher prices because if they would have had it on the market a year ago, they would have got higher prices, and they're not, coming down to where the market's at today's market. So the volume's not happening. Not that you couldn't go buy those things and try to sell them at where the market is and make them happen. It's just a lot harder to buy those. And the market seems to be happening in others. So let's jump into, let's pull up another screen. It's got Zillow in the background. I play with Zillow a lot. I play with a lot of different websites and data sets, but Zillow is a fun data set, right? On this side, we've got examples of properties. On this side, we've got Sacramento, because I had Sacramento on the list when I started making this video. So let's start with Sacramento as an example. So we've got Sacramento, and I haven't looked at this here, but I'm for the economics to happen in these kinds of trades, I'd like to sell stuff that's a higher dollar trade. And a lot of you guys probably get frustrated with me for that, but I mean, you can go after lower dollar trades if you like, but I like the little bit higher dollar trades. And we can get a realtor to show up and take a tour and tell us this thing's it doesn't work or it works, or how much they could sell it for. We could put them on the phones instead of me trying to sell the thing. And we can outsource a lot more of the work to other people. We can use title companies to close instead of doing self closes. We can pay for stuff along the way. Like maybe we got to put in a driveway or test the septic, or we got to, stuff like that. The bills could fit in there a lot easier in these kinds of dollar sizes. So I did 150 grand. Maybe I can't reach that far. I did 150 grand plus kinds of deals, and I narrowed it down to, on the home type, land, just land. Nothing's checked off but lots and land. And then in more, let's see, I don't have this set up yet, but okay, I got it narrowed down to 90 days. So 90 days, okay. Let's do some sizes. I'm going to do some lot sizes. I'm going to do half an acre to 1 acre. Let's just see what happens. So half an acre to 1 acre stuff. These are getting tighter into metropolis kinds of areas, and they probably have utilities, I'm guessing, and they're happening. So let's look at some of these that are happening on the market. Let's just take some crazy examples. So this is going to be the most recent trades. I got newest going down from there, and this looks like, medical and food and stuff across the street. This might be downtown. This looks like commercial stuff. And it's just listed on the market. So let's look at ones that have sold. So let's look at stuff that's sold. So 150 grand plus. And I'm going to try to explain what I'm doing here as I'm going. And so I'm looking at, and I don't think this is going to be the market we're going to end up in. This is just an example to get started with. I'm looking at a market, and then I get this dialed in. I can take this and run to a bunch of other areas. And so got 9 results on the screen here around the Sacramento area of what I say, half an acre or quarter, I think it's half an acre to 1 acre, that have sold in the last 90 days. And I've sold lots of properties, bought and sold all around this area, probably lots of these streets that have come through here and neighborhoods. And yeah, so there's You know, good looking properties going by. Look at this thing, 670 grand. Somebody paid for 0.6 acres in El Dorado Hills. Listed for sale on 124, pending, or sorry, oh, no, 23. This was January, and then it took till August to go pending. So that's, you know, 7 months or something, and then it sold in December. It took a long time to close. That's a slow one. So we want to look at the speed that these things are happening, how fast from posting to sale, and we want to look at how many of them there are for sale versus sold. We're going to look at a lot of these different kinds of statistics is what we're doing in this video. And the idea is finding an area where lots of trades happening, that we can buy some properties and deliver some more of them to the market. I think we're going to look at ratios too, like how many properties are for sale versus how many have sold. We want places where there's not a whole lot for sale, but a whole lot sold. That means there's more pent-up demand looking for stuff. And when we look at the days on market for some examples, it'll be like listed, you know, one day, sold the next day. It's the ideal scenario if we can find those markets. Those are really easy. This half an acre thing, $456,000 for half an acre. And I don't see the, okay, so pending sale on 114, listed for sale on 22, it's 2.5 years or something between they're asking too much money. So none of these have like short amounts of time between buying and selling that I've seen so far. So listed for sale in August, pending in January. Like what the heck? Now these are longer timelines. I don't want to sit around and wait that long. So price change, listed for sale in March, dropped the price in May, listing removed, put it on the next year in March, sold, what the heck? I don't know. It's weird transactions. Okay, so none of these are straightforward looking transactions. Let's play with the size. So let's go, so none of those are going fast, right? So if we bump this up to like 5 acres, if we do the 1 acre to 5 acres, we'll just walk our way up. And maybe Sacramento is not going fast. Maybe that's the problem. So we can keep changing these variables until we find where it's awesome, right? And then we can go dive in. We'll take it to the next phase, and I'll show you how I like to dive in from there and eventually turn it into mailers and make them cash offers, buy up the properties at low prices, and then go sell it at higher prices. Okay, so here's El Dorado again. This is 200 grand land. This is 2.86 acres. Sold in 2008, sold in 2009, listed in January 2004 for 250 grand. Went pending in February 7th. So that's 12 days later. It was on the market for 12 days, and then it sold for 200 grand when they're asking 250. So it sold below market, but it's a pretty short spin on that one. Here's 206 grand, 5 acres. Listed for sale on 113, sold on, or pending on 119. What was that, 6 days on market? I like that. So get a little bit bigger properties and the things are turning over faster. Here's one, this is 1.1 acre. This thing's listed for sale in October, went pending in January for $599, sold for $590. Here's 1.84 acre, listed in January on the 3rd, went pending on the 4th. I mean, they had some history before that, like maybe they tried and it failed, but eventually they got it right. 1 day on the market, gone. Like, I like that. They're asking 398 and they got 280, so they got 30% below the mark, below what they're asking for, but they still got it off fast, right? This is the market finding where the prices are working. And you can do this across lots of areas, lots of places, and you start to see that these ones that are going faster in today's markets, from what I'm seeing, it's not the smaller properties that you slap a house on. It's the bigger hobby farms. And I think as we go up a little bit in price, we'll see it even some more. That's my synopsis. I haven't tested on this Sacramento market, but that seems to be what's happening in lots of markets around the country. And we'll go do that on some other areas. So here listed for, this is 320. So listed for sale, 12/1, and pending sale 12/1, listed and pending on the same day. Busy day right there. And sold for 335. It went for more than they're asking. They're asking 320 and they got 335. Like, good job, guys. So what was that? I mean, we want some of that land. This looks like it's got a hill and a lemon tree. Undisclosed address. It's like the neighbor said, you're not selling that. Okay, so 2-acre lot in the outskirts of Elk Grove, 295. This is for sale by owner. So this was on the sold list. So somebody just bought it. Now they put it up for sale. So they just bought it for 245 and now they got it listed for 295. Listed for sale 295. Yeah, sold. I don't know. It's really this thing keeps flipping and flipping. Okay, so I think you get the idea of what I'm trying to say, just giving you some live examples. So here's another one. Let's call it 3 acres, listed in November 23rd, pending 1/23. So exactly 2 months later, with Christmas and New Year's and stuff in between, asking 475, sold for 460, just a little bit less than the market. So these trades are happening in this area. I like that. Let's go to let's play with the size some more. So let's bump it up. We're 1 to 5. What happens if we go to 20 acres? If we do 5 to 20s, and I think if we bumped it up some more, like 2.5 to 20, something like that, I think we'll see even more of it. Okay, so now we're at 5 to 20s, 5 to 20 acres. And so the first thing, the most recent stuff sold, it just sold on Valentine's Day, got recorded on this one. This looks like it's got a building on it. 9.7 acres, 665. Do they talk about yeah, there's a mobile home on the property. That's bad data. Let's skip that one. 5 acres, 165. This one is paved access, power, phone along the street. Wendy James. I think I've done deals with that broker too. 214. So they listed it for sale on 127, and that's like 3 days before the end of the month, and then 3 days into the next, so like 6 days. It's on the market for 6 days, went pending, sold for 165. That's 10 grand over. So in those 6 days, they probably had a couple bidders, and they put the bidders against each other, and they're asking 155. They got 165. People are making fun of today's market, saying you can't do deals. It's hard. It's not working. It's not happening. But in some of these classes, it's working. I mean, here, the property's trading at above market prices. And as we go look through lots of parts of the country, it's happening in lots of these kinds of properties. This class of property. That's why I'm focusing on this class, and that's why I'm talking about hobby farms today. So here's another one. This one just sold 175, just like within a month ago. Listed for sale back in May of 22. Holy cow. And they lowered the price in March of 23. And then it went pending in December of 23. This is when the whole market's full of these things. You skip it. This one looks like it's way up the hill. So this is in Placerville. This is, where's this one? Pull it up on the map. Placerville. Okay, so it's south. So it's down here. And it does. As you get down here, they move slower. I've had them move slower in these areas too. But as you're up in this area, they tend to move faster from historical experience as well. But Placerville's over here, and this one's over here. I've had them Placerville that have taken me forever to sell. I got some uglier ones in different parts of Placerville in the past. but difference, they just didn't have it priced right, probably priced too high. Um, okay, so let's look at the for sale stuff. And I spent a lot of time going back and forth and looking at these. So just bear with me, and I think you'll learn along the way if you have the patience to hear me out. So the for sale, on this same for sale screen right now, we've got 24 results. If we switch it to sold, we've got 17 results. That's pretty good. 17 sold over 24 for sale. I mean, that's, there's some good ratios in there. And you go look at these ratios back and forth, you can see places that have way too much for sale versus ones that have, holy cow, a lot of stuff sold and there's not much for sale. And if you kind of study those ratios, you can see areas that are moving a lot faster, that have more demand and less supply. And that usually means, higher price over time, and you're getting on the right side of the trade. And so if you can get people to sell you the properties, go put them into those markets, you can make spreads off of them, right? So I've skipped around. I got some chicken scratch kind of notes here in front of me of a bunch of different markets I've done this kind of ratios on going across the country. And I like to skip to a couple handful of them that the ratios came out better at for a savings of time. In my mind, I'm thinking, let's go look at all these, but I don't think I have your attention for that long. So let's look at a couple of them that I think are ratio-wise sticking out better. And then let's look at kinds of the times on market and dial in times on market and pick one of the better ratio ones that seems to have lower times on market and dive in and go deeper from there. Okay. So I'm going to pull up Indianapolis to look at. Indianapolis, nice donut, like where the trades are happening. So I've got 5 to 20. I think I want to do they got 2. I think I'm going to try 2 to 20. And I think we've got 90 days. Okay, so I've got 90 days and $150,000 plus of 2 to 20 acre properties. And if we take out the dollar size here, I mean, you'll probably see even more properties show up, but I want to target the better trade ones, ones that we can sell for more money, if you will, than just the cheapest ones in the market. Historically, I always went for the cheapest ones in the market, but those aren't always the ones that sell the easiest. So we've got Indianapolis, and I think this is a good example. So I don't know if you can see the markers on the screen as well, but none of them are downtown because it's already been developed, right? And I've got a cap of like $700,000 on the price over here because I don't want the commercial going to put a skyscraper there, property or an apartment complex or something. This is where a house goes, simple residential ones for the point of this exercise. So I see them in like a radius around Indianapolis. I think Indianapolis is a good example because it doesn't have like a lake or a major riverway or mountainway or something that makes it more complicated. It's just your classic American metropolis downtown and expands out from there. Other places in the world do that too, like Moscow or somewhere, but with ring roads going around. Okay, so the most recent trade here is trades. No, these are for sale. So let's go to solds. So the recent solds are the same kind of thing. They're out around the outskirts of town. Maybe they're out like where the freeway still gets in there easier. But I think they're areas where people could build a house and they could commute to town if they wanted to. And so it's just the outskirts of town. It's just, going out, town's growing. And this is what happens. Okay, so the first trade that comes up here is the 16th, which I think is Friday. I think that was Friday last week. This is like a grand entrance. I'm taking it to this neighborhood. Maybe this is the entrance. Yeah, it's probably entrance here, coming in around, and you go up to the property, and then you get in there. You got some trees. You know, straightforward, solid piece of ground, right? Classic American dirt. Maybe there's some topography back in there. It might even go down to a pond. Maybe it does. Like, yeah, there's some waterway in the back. Okay, somebody paid 685 grand for this. And so it's listed for sale November 8th. And then December goes by, and then we get into January 18th. So it's 30, 48 days later, it goes pending, and then it sells. So it's not on the market for very long. It's not like as fast as some of those examples we just saw in Sacramento, but still pretty good. And so the next one, this is 19.4 acres. I mean, this looks like a classic piece of dirt. There's some usable looking land in there, trees. Looks like a driveway, a stream on one side. Yeah, here we go. There's a clearing, creek, entrance. Yeah, they're showing that some of it's a flood zone, but there's still probably a buildable area and farmland around the area, and then this you know, enclave in between. Here's your creek. Okay, 220 grand. They listed this thing for sale in September of 23, and then they dropped the price later in September. They dropped the price in January, and then it sold 7 days after they dropped the price. So they drop, and then they got the right price and it sold, and it's gone. And so they tried 242, but they got 220. And so it's drop, and then, you know, even lower yet, they got it off. But it sold. Okay, so 346, or 3.5 acres, let's call it 180 grand. This looks like classic American kind of ground. This looks like the kind of ground I grew up around in southern Michigan. You know, go hunt pheasants or something on this kind of ground, right? Here we go, Midwest. Looks like a hayfield, trees, leaves will come in later. Looks a lot like southern Michigan that I grew up in. Danville, Indiana. So 3.5 acres, 180 grand, listed on 130, goes pending on 131, and sold for 180. That's great. Like a nice, solid, easy, straightforward piece of land. There's another one, 8 acres, 223 grand. This looks like another solid, easy, straightforward piece of land that's not like swamps or anything crazy to figure out. It looks like it's got a big power line going across it. So maybe there's an easement for that screws up part of it, but most of it probably works just fine. To build a house, go for it, have horse, dog, whatever. And so listed for 235, November 13th, December 17th, it goes pending, and it sells for 223. So 5% under asking price. It's totally fine and normal. And it was 35 days-ish later that it was on the market. That's pretty good. Here's another one. Another solid piece of land. Looks like maybe they broke it off the neighbor's property. Oh, look at this. There's like building some big houses in the area. Maybe this whole farm's getting chunked up into bigger houses. Maybe that was the original house and then they're breaking the pieces off. That's what it looks like to me. 165. So they listed it for sale and November 7th, November 13th, it goes pending. They asked 175, they got 165. These are healthy markets. In some of the places we look at in the country, it's like list at this price, sell at this price. again and again and again, lots of them, the big disparities between list price and sell price. But this is telling me that the market's getting, it's rationalizing. People are figuring out what stuff sells for and they're listing it at what are pretty close to what stuff sells for. Over the last year, it's been a lot of listings at way higher prices, dreamy prices of COVID times, and not selling and dropping prices, dropping prices, dropping prices, trying to figure out where this stuff is happening. And maybe I'm lost, but some areas it's just the buyers catch up with the prices, even though it's this kind of market and go for it anyway for these kinds of properties. So different parts of the country, right? Okay, so this is Indianapolis. And so I was looking at Indianapolis. I'm really interested in this market. I'd like to mail this market. So what I'm doing is I'm offering mailers. I've done lots of mailers with people in the past. If you'd like to do mailers with me, that's great. I think that's wonderful. I'd love to work on mailers with you. If you want me to do the mailers, I would ask for a market like this. Let's ask for $1,500, and I'll put a link in the description below. And let me take notes for myself. So I'm gonna put a link for $1,500, and I'll put a mailer like this together around a market like this for you. And I will send it out, and with your name on there, you answer the phones, you take the calls, you talk to these people, you do the deals, you finance them, you make them happen, you keep everything and go make a bunch of money and come back and say, Luke, do another one. That's great. Now, if you don't want to answer the calls, if you don't want to finance them, if you don't want to, whatever the ingredient is that you're missing, let me know, and I can help. I got lots of different ways that can help, lots of different partners I work with that can help, and you can pull off the whole show if that's what you want. And I'll just price it accordingly, and we'll figure it out, whether it's dollars or percentages or let me know. I'll put my contact information in the description below, and reach out to me, email me, call me, text me, message me, and let's make some mailers happen. I think there's a lot of opportunity going on in today's markets. I think the markets have changed, and a lot of the other people sending mailers aren't changing with the markets, but I think we can, and we will, and we should take advantage of that, of what's going on in the markets right now. Okay, so there's my ad. Let's switch back to educational stuff. And so this Indianapolis one, well, I'm looking at, okay, so let's do this in another way. So let's look at the ratios. So I like the times on market of these. I think they could be better, but it's just pretty friggin' sweet the way it is. And so if we look at the solds, so this screen that I've got over here, this side of this green part of the screen, it's kind of outlining Indianapolis, maybe a little bit more way over there. And then it shows up over here, an account shows up over here of how many properties fit our criteria. With our criteria right now being sold, $150,000 to $700,000 price class, home type being land or lots and land, and more being 90 days, within the last 90 days stuff, and 2 to 20 acres. Okay, so if we look at the number on there, we've got 36. Let me take some notes while I'm going here so I don't get totally lost. So we've got 36 solds, and if we switch it over to for sale, we've got 54. This is a really childish way to measure, but I think it works. Sometimes the simpler you keep it, the easier it is and the more usable it can be, right? So we've got 36 over 54, and if we just do some math on that, like I'm not the super math whiz, I'm better at using software or something, right? So let's do this. 36 over 54 is a ratio, 0.66. Or 66%, however you want to look at it, and that is Indianapolis. If you do the screen in and out, blah blah blah, around the town, you probably come up with something like that same kind of ratio. It doesn't have to be exact. And so let's look at some other towns like, oh, I know, let's do Lexington, Louisville, Kentucky area. So this is south of Indianapolis. We're going to go down and I like this area. So we've got a couple trades over in Indiana. We've got most of it in Kentucky. So I've got Lexington and Louisville on the screen. And let's take a look at this area. So let's do that ratio. Let's do the same ratio we just did. Let's keep the same numbers on the screen. Let's just check out their ratio. So on the for sale, I'm on for sale right now, and we've got 97. So we've got 97 for sale. And if we go to sold, we've got 79. That sounds like a better number to me. Let's see what that is. That is, so 79 over 97, 81. Yeah, so taking some notes. So Lexington, Louisville kind of area. It's happening for these sizes. It's really happening. So let's look at some of the sold. We're on sold. Let's look at some of these solds like times on market. So 5.27 acres. This looked like somebody just carved this up and they sold a couple of them, right? It's like cut right out of the middle of a hayfield. This looks like a split. Yeah, here, tract 2C. So they probably tract 1, tract 2, tract whatever. Somebody's splitting the land. So they listed it. They listed it in December. And then February, they dropped the price. A couple days later, it went pending. So when they dropped the price to 169.9 in February, from there to getting the action, it was 7 days. There was a 7-day spread from getting the price right to getting it under contract. And then it closed. It closed for the same price. They just had to get the price right. I mean, they had dropped it 12 or 13% before they got it. So good for them. They're probably selling multiple lots and they got it dialed in. So these guys, 15 acres, 215,000. This looks like good, solid American land, right? Is that soybeans on there? Not exactly sure. Just carving a piece off, maybe piece of the farm. So they listed it for 250 grand and it went pending 250. They listed it in October and November, December, 2 months and 6 days. So 66 days, let's call it, on the market. And then it sold for 215 when they're asking 250. So they asked 250 and they got 215. Maybe if they're a little better at pricing it, they would have gone faster. But it's happening, right? Here's another one. This one looks like it's got a pond, maybe. That'd be nice. Yeah, look at that. Look at that. And it's a good shape. It's like number one, baby. So nice piece of grass in the front, pond in the back. Looks like gated entrance. Look at that fanciness. Yeah, somebody split it up. This looks like it used to be one of their fields. Maybe they had their cows or horses or something here. And then looks like more horse fence. Maybe they're over here now. 205,000. And let's see, listed for sale on 12/21, pending in 12/22, sold for 205,000. It's a beautiful looking property. I mean, if they got the price right, maybe they even priced it too low, sold in a day. Maybe you could have asked another $10,000, $20,000 and let it go for a week or a month and then sold it. I don't know, but it worked. I would have been happy if I would have been the one doing that. So here's a split. Somebody's selling lots off in the community. Here's, I'm going to skip a lot of these splits because they probably post like a whole bunch of them and people pick. They usually take longer to sell them than the one-offs, and I want to be selling the one-offs. So 5 acres, Muddy Ford Road, 175 grand. let's see, contingent, pending, and then it went back. So they had it, somebody didn't actually pay, somebody bounced, and then it got listed on 9/21. 2 months later, pending again, and then it sold for 175. So it's 175 all the way through, generally a shorter amount of time. Maybe they tested for septic or something. 13 acres. This another one might have a pond on it. This one's kind of, it's all, the properties look more maintained in the area, and this is kind of the roughy land in between. But look, it's got a pond in the back. It's got a gravel driveway going over to it. It might be the neighbor's driveway. It's a good looking piece of ground. I'm sure you could get a house to stick on there. Maybe it's the hill. That's why it's not turned into farmland. Might be some lower stuff in there. So straightforward looking land, listed November 17th, pending January 6th, month and a half ish. They're trying for 300 and they got 260. So it's, I think Indianapolis might be a little tighter on the timelines, but I think Louisville, Lexington might be a little bit more volume in the area. And there's less available for sale in the Louisville, Lexington area than in the Indianapolis area. Might make it easier to bring new ones into the marketplace and get them taken up and gone a lot faster. These are my synopsises off of this. Let's try some other areas. I think both of these areas would be awesome. Let's try let's do a different example. So let's go to the Carolinas. Let's do this is an area lots of people like to work. Winston-Salem, Greensboro, Durham, Raleigh, Durham area, and in between in this whole region. So we're in North Carolina, and I've got a theory that more of this trade is happening around the Chapel Hill area of these kinds of size and price class properties. I think as we get closer to some of these towns, the prices might go down. And as we get towards we're trying to distill the best of it. And so where the prices happen should show up in this kind of map where we have it filtered to sales happening over 150 grand for land. And so if we see multiple properties of land going off above those prices, it might be better areas. Because I get a lot of properties in the Carolinas that are subpar, that are like hard to sell, that are like you could get them for low prices, but good luck trying to sell them for the higher prices. And they could be right next to each other, like one street over. It's hard to compare land to land in some of these areas, and different neighborhood regulations and stuff that goes on. It's doable, but just some kickbacks. So I'm looking at this area, and we got some trade over here on the eastern side of Raleigh. We got some trade on the western side, like the Chapel Hill area. Little bits around Greensboro, Winston-Salem, getting down towards Charlotte. Maybe there's even more of it down towards Charlotte. Maybe we should head down there. But this seems to be happening more around, to me, like this Raleigh, like greater outside of Raleigh. So this kind of looks a lot like the Indianapolis play we're just looking at. But let's see if I can get this dialed in a little bit more. Let's call that our map for right now. So this isn't exactly what I was looking at before, but I was looking at the Chapel Hill area, which is right here. And then this corridor in between's got some trades going off. But Like if we keep that on the screen and we get the greater part of Raleigh, like there's trades down here going off too. So they're all dots on the screen, but there's a bunch in there as well. And to put those together, it's kind of a donut thing outside of Raleigh and Durham. You know, Raleigh, Durham like this. So maybe it's a figure 8 kind of thing around them that town's expanding into. And maybe to the north it's not as much because of mountains. Maybe I'm lost. Okay, so let's look at some ratios here. So we've got just take a note for myself. So we've got on the sold side, we've got 43 of them. And on the for sale side, 70. So what's that? That's interesting ratio. So 43 over 70. 61%. Indianapolis was 66. Lexington, Louisville, Kentucky was 81. And I think the Indianapolis was going a little bit faster turnovers. But Lexington, Louisville is doing pretty darn good too, but there's just less supply in the markets to compete with in the Lexington, Louisville over the Indianapolis. So let's take a look at the speed of this market, because there's a little bit more available for sale in this market than has been selling on a ratio basis. So let's look at the sold stuff. So the most recent sale here, 10 acres, Pittsboro, North Carolina. Listed for sale. I mean, they had maybe a different broker and they got a new broker. Listed on 114, pending sale 114. Sold 214 a month later for 250. So they were listing it for 299, sold for 250. I don't know why it changed brokers, nothing, then changed. Maybe they had a broker that didn't answer the phone or something. They got one that answers the phone. So here's another one. Let's see. Listed 325, listed 1.5, sold 112, or pending 112, sold 2.8. This is fast. 325, listed for 325, sold for 350. That's pretty cool. Selling for more than they're listing it in a short amount of time. Gotta love that. 10.5 acres. This is Chapel Hill, North Carolina. This is the part of the area I was thinking was working, looking at the maps. Listed in 22. Dropped the price in 22. Dropped the price some more in 22. Listing removed. And then it sold for 250. I don't know. They were asking like upper threes and eventually sold for 250. That's a weird one. That's not a good example. Looks like a solid piece of ground, but on a big hill. It's got a power line going through it. Piece of woods. Let's try this next one. Tilly's Farm Road, Lot 3. This same neighborhood seems to have multiple lots going off. Wonder if they sold the whole neighborhood or. I mean, straightforward looking piece of land, just sold. It's not the history of these lots isn't stacking up. Listed 2019, pending 2019, sold 2019 for 65 grand and then sold again for 550 grand in 2024. Boy, the market's changed. 387. So Chapel Hill again, listed for sale in December for 400 grand, pending in January, a month and 4 days later, and then it sold for 387. So a couple 3% less than asking price. Looks like a solid piece of land. No swamp here, right? Paved road, maybe a hill. Okay, so some of them are longer, some of them are happening pretty fast. It's kind of a mixed bag. Let's try another one. So another one that I think would be fun is Columbus, Ohio. Let's try Columbus. There's lots of different markets to do this in, but let's try Columbus because I think the numbers are working there. And so Columbus, taking some notes. Okay, so Columbus. So kind of over here, there's a good, it's a good donut around the town that it's happening, right? Not downtown, not right on the itty bitty sides of town, but a little bit out. As you go further out, I think the prices drop off. So let's see, we're on sold 150 to 700. We got the 90 days, we got 2 acres to 20 acres. So let's look at the ratios here. So Columbus on the sold side, we got 85. And on the for sale side, we've got 63. And that is a beautiful thing. So in the last 90 days, more has sold than has been listed. And so that's a healthy number. That's a good market. That's like, I mean, the percentages are, it's over 100% when we were looking at the numbers before. So in the past, and all the numbers we looked at in the previous cities, more stuff is getting listed than is selling in the same kind of timelines. And that's I mean, that happens. That's more of a normal market. Lots of stuff gets listed and they ask for some dreamy price and it doesn't sell and they cancel it and they keep it. Or, you know, things happen and it builds up over time and maybe they change the prices around. Eventually it goes away. But when you have a market that even when people put the dreamy prices out there and stuff's just getting bought up, right? I don't know how better to say it. Like the ratios are in our favor of being able to be a seller in this market. We still have to go buy the land and get our hands on it to go sell it. But here, if we get our hands on it, this looks like a nice place to be selling it, is my point. And the idea of looking at data. And I would never guess that, you know, Columbus, Ohio is the place to be today. And data changes. And tomorrow it's the next town and another one and another one. Other people might see prices and angles and statistics and ratios and go flood the markets, or maybe the realtors start calling all their old clients, hey, the prices are up, like I got buyers, like let's sell this stuff. We're trying to find stuff off the market and bring it to the market. We should be out there finding stuff off the market and bring it to the market when we find ratios like this. So Columbus, Ohio, let's take a look at this. Let's dive in some more. Okay, so Columbus is, the ratios are working really well right now. And I wanted to look at like times on market. And I'm not saying only Columbus, like lots of these cities work great to do mailers and do deals. I'm just trying to hone it in and pick the next one to mail, right? So Columbus, we've got this over my head here. Last trade was 159, 6 acres. I miss it? It just says listed for sale. Oh, these are the, I got the for sale. So let's do the solds. I wanted to look at history of solds. Okay, so $460,000 for 20 acres. Looks like a nice piece of property. Like a stream, flat spot, some rocks, some hills. Hopefully you can get a septic in there. 460 grand. Half an hour or so from Columbus Outer Belt. So listed for sale, $299. Contingent, that was $116 when contingent on $219. So 18 days, 18 or 19 days later, it goes contingent and then it sells for $460. What am I missing here? They listed it for $299 and it went up 53% to $460. They have a bidding war. I mean, that's like that's awesome. It's 50% more than they listed it for. Like, heck yeah, that thing went flying off the shelf. 5 acres. Looks like somebody did a bunch of splits. Some history. November, it was contingent. Listing removed. They posted it back fresh 112. They posted it for 100 and let's call it 160,000 pending on 112. So it pending the same day they posted it back up there, and then it sold a month later. Same 159. So maybe they had a backup bidder or something. So let's try the first time. They listed it for sale 2022. Price changed in June, and then it went in November. So this one's got history. This is a split, so they probably are trying to sell like a dozen of these. Let's try another one. 150 grand for 4 acres. Listed for sale 150, contingent 150. So 12.6 to 110. That's like 35 days or something. And then it sold for 150. It's 35 days with Christmas and New Year's in between on market. So here's one. Looks like some nice big new houses on either side of it. It looks like paved street. Looks like it's got the utility hookups going here. 190 grand. Listed for sale 323, pending 123 or 131. Last day of the year it went pending. That's a long time. That's like, yeah. From March to, there's a long time spread in here where this one sold, and they sold it for 190. They sold it for less than they're asking. Maybe they didn't have the price right. Here's 6 acres, went for 415. Listed for sale, price change, change, contingent, sold. So February, May, September goes contingent, and January sold in February. This is a longer time on market. Took a year to pull this one off. This one looks like a good solid piece of land with some trees in the background and stuff. Maybe an old Christmas tree farm. So this is listed for sale March. Price change in May. Ooh, price change in March of the next year. Pending in January of the next of 24, and then sold. That one's been on the market for a long time. Maybe they just didn't have the price right. Ended up getting 275 and they're asking 299, and they didn't lower it much over the course of 2 years. So I like the ratios of Columbus, of how many have sold versus how much is for sale. But I like the times on market better of Indianapolis, maybe Lexington. Let's keep looking. This one just has sold, sold, sold. It's like back and forth and round and round. I don't understand this one. $222 for 7.5 acres with a gate and a driveway. Listed 249, pending 249. So this is December, January sold. This is more realistic. 1 month on market. So this one listed for sale, pending, like 15 days between, it's on the market for like 2 weeks, let's call it, and then it's sold for 300 and they're asking 325. This just looks like they cut the corn down for silage. It's a classic cornfield lot. Okay, so now I'm scratching my head. We've got Columbus, Lexington, Louisville, Indianapolis. We've got a couple good ones here to choose from. Okay, I'm thinking I'm gonna go with Columbus, looking at these, because the ratios, there's good trades going on here. I think if you get the price right, they go pretty fast. And the ratios of how much is for sale versus how much is selling is there's more volume going on here. Like in Indianapolis, we got 36 sales. Yeah, they're going fast for the same kinds of thing. But Columbus, we had 85. There's just more. It's like almost 3 times as much more volume going on for this kind of deal. Lexington, Louisville, it's like 79 to 97. I mean, they're going fast there too, but we got more volume in the Columbus, greater Columbus area. And the ratio is just so much better of 85 sold to 63 for sale of this kind of class. So I hit pause and I just thought about that for a little bit, and that's what I'm thinking. Okay, so next, if you guys are still listening, thank you. Congratulations. Thanks for watching. Thanks for listening to my extra long video here. And I'm going to put a link and info in the description below if you want to buy this mailer or mailers like this. Contact information to go for it. I'd love to do some mailers with you and get some of these deals turned into, some of this data turned into land that we can turn into money and make it happen. Thanks for listening. Let's jump into, I'm going to switch over to phase, next phase, I'm going to do property radar. And in mailers I've done on YouTube like this in the past, I don't think I've ever done property radar style stuff, but I'm gonna today. So if you guys have never used property radar is it's a unique set of software. There's other softwares out there you can do similar kinds of stuff, but I've used a bunch of them and I've settled in on property radar. Maybe newer ones have come along since, but I mean, property radar has worked great for me. And so I'm going to keep using it as I can here. I'm going to do a location. I'm going to do state. I'm going to do Ohio. I'm going to dial this map into Ohio, and we're going to choose, I'm going to do the same kind of search we just did in Zillow, but I'm going to do it in property radar. And I'm going to do it in property radar because there's different kinds of land use codes. And I'm going to have to figure out what kind of land use codes are happening here to find the same kinds of land. Because Zillow says, oh, it's a piece of land. And then the county says it's a piece of commercial land, or it's a piece of swampland, or it's a piece of residential land, or it's a piece of something else. So we got to figure out what this stuff is being called locally. And then we're going to search by that. And we're going to look at one of the neat things about Property Radar that you're going to see is we're going to be able to see it on the map. And we're going to be able to look at trades. They're pretty good at lining up trades with where it is on the map. In most places, I haven't done it in Columbus, but I'm guessing it's going to be the same idea. So we've got Columbus, and a lot of this seems to be the same county, but there's neighboring counties out around it. I don't know what the names of those counties are off the top of my head, so I'm not putting those into the search. I'm just going to circle them. And so the other thing I'm going to do is I'm going to do trades, transfers. So they've got something most recent, change of ownership. I'm going to do the date, and I'm going to do in the last 90 days, because that's what we were just looking at, right? Or maybe I'll do, yeah, let's do the last 90 days. And then I'm going to narrow down by acreage. I'm going to go to property, lot acres. I'm going to do, I think we had 2 to 20, but I think I'm going to do like 4 to 20 or 20, 23. So I'm going to get the 5 acres in there, and I'm going to get the 20 acres and the fat 5s, or the skinny 5s and the fat 20s, I guess. So a little less than 5, a little more than 20. And I think that's where the action is on a lot of these properties. And then I'm going to look for transfer value, most recent change of ownership, purchase amount. So I'm going to do this 150,000 we were looking at, and I'm going to do, I think we had it 700,000. I'm going to do that. And so we've got, they're starting to pop up on the map. And the way this software works is if you get the number of records below, I think it's 10,000, then they start showing up on the map. But if you got everything, they don't all show up on the map. So as you start narrowing in your search, you can start seeing them on the map. And so when we can see them on the map, we can pick out the areas that we want to work more. And so we still have, I want it to be, we still have houses in here. And so let's do property type. Let's see, land. I'm going to do property type, land, residential acreage. They've got residential lot, but that's like 1 acre less stuff, and we're going for bigger ones. They've got other kinds, but I'm just going to do residential acreage for now and see if that works. It might be agricultural that hits them, but let's see if residential acreage hits them. Yeah, so we're seeing a grouping around the outsides of Columbus. It's not as many as I was seeing on Zillow. Let's take a look at some of these. 650. These are like way out here, too far. 400. 265. 161. Closer to town, 579. 530, 325, 410. There's a bunch of them that have traded here recently. It was all James Mitchell. I just looking at different ones, what they've traded for, so in the areas. So if we go back and we look at the Zillow, there's a lot of them north of town, and there's not so much south of town, but you get out into these more greener areas, getting more of them on the other map there. But here, it's a lot of them are just north of town and over by Newark and this side of town. So let's see if we can get some more of these to come into the screen. Because there should be this side of town, this side of town. Doesn't seem to be so many of them filling in. And maybe these are smaller sizes. It's 15 acres, 5 acres, 20 acres, 9 acres. So these aren't, it's not about the size. Maybe it's the kind of land. So let's add some more. Rural home site. Let's see if that takes. We got 76 records up here. I don't know if you can see that. We add different kinds of land. Let's see what happens. The rural home site didn't work. Wonder if it's miscellaneous vacant land. Watch it go crazy. 76 goes to 120. Let's see what happens with miscellaneous types of land. I'm not sure that's helping or not. I don't think it's the ones we want. Could be the agricultural or something. Let me play with it and come back. Okay, so I've been playing with the different types of land. And in land, in real estate, if you don't know, there's the zoning, or the county will code it as agricultural land or residential land or commercial land or some subset of that. Vacant land, no development potential, barren land, desert land, land where cell phone tower goes, or radio tower land, or like all these different categorizations. These categories come from the county. They're county specific, and if you start crossing county boundaries, you're changing from one set to another set. And so I'm seeing that in this area. And so in this area, you can see these different clumps or different counties. You can see it's like a square. There's a square of what's going on here. Then there's a void here. It's because this county is not categorizing stuff the same way this county is, and same with that county. So I've got miscellaneous vacant land pulled up on the screen. I was trying to see if there's stuff hiding in there because there's kind of like a gap below town here. And I find a lot of the land in this area to be agricultural land. And when I try to narrow in on the agricultural land, like without bedrooms and bathrooms and stuff, square footage, I zoom in and I see that a lot of it is, it's the farm. It's the farmhouse part of the land, and maybe not where the crops are. It's not like the crop land, but it's like where the house land is. And so I'm testing a couple different ways of doing the data, and I'm honing it in. So I'm going to keep testing and I'll come back soon. Okay, so I've been playing with different settings, and I got the idea down. So I got different kinds of properties that work for the counties around here, and the ones that have sold recently for the kinds of dollar prices I'm looking to do deals in. And so what I'm doing is I'm searching for the ones that have traded, and I'm modeling around them to ask for the others that have not traded. So I'm creating this data set off of the ones that have traded, and now I've drawn a line around the kind of area that they've traded, and town's in the middle here. And the data gets really weird in the downtown stuff. Like it picks up a lot of, the freeway does this, and the strip in between to go, like these little bits and pieces that I don't want. A lot of industrial stuff I don't want. It's a different kind of play. I want the stuff that's on the outsides of town. And so I've created a bubble of the whole thing, and now I'm going to create a balloon. I call it a balloon because I'm just going to put a little path in and a circle around the stuff I don't want, and then come back out. So it'll be a it'll wrap around, but it won't connect. And that way I'll get rid of the stuff in the middle. And so I'm going to do that next. And eventually I'm going to flick the switch from the stuff that has sold recently to the stuff that hasn't sold in a long time. And then we'll see what kind of data is there. And that's the idea. So that's what I'm working on. I'll be right back. Okay, so I got my balloon inside my bubble. So I got my bubble around the area that the trades are happening. And I don't know if you can see a little gap in here, so it's not connected, so the map still works. So I got my bubble getting rid of the piece that I don't want and right downtown stuff. And so we've got the stuff outside of town that are trading in good sized dollars. And there's just a kind of a gap down here because the data is a little weird. But I think this is pretty dialed in. So what I'm going to do from here, we've got the basic search. So we started out with a big picture with a theory, and we took it down to practice to see what's going on in the area, different specific areas. And I looked at lots of areas and I boiled it down to some of them that seem to be happening more right now. And we only looked at a couple of them in the video compared to all the ones I looked at. And then we jumped into new software and we, Property Radar, and we modeled based on the county coding of what those properties are, where those properties are happening. We got them pulled up on the map and we circled them on the map, and then we took out the places we didn't want. And so now I'm going to look at it in a data view, and it gets a lot more boring, if you will, to look at like lines on a of data versus a map. So I'm going to switch off the cameras and I'm going to try to explain what I'm doing next. I'm going to look at the higher end of stuff like taxes, assessed values, whatever I can figure in the data. And those are going to be weird ones. I'm going to cut those off. I'm going to look at the lower end of taxes, assessed values, things like that, whatever else I can find in the data. Those are going to be weird ones. I'm going to cut them off. The idea being kind of 80-20 principle. The 80% is where most of the business happens, and the top 20%, or let's say 80% is kind of blah, and the top 20% is where most of the business happens, or where most of the problems come from. And so the ones that are kind of the homogeneous middle are easier to buy, to present at prices that make sense and happen. Maybe I'm not explaining myself very well, but there's a distribution in here that the weird stuff on either ends, when it's cut off, you got more of a similarity stuff in the middle. And so we want to cut those ends off and focus in on the stuff in the middle for this kind of approach in data. And those ones we can run pricing. We can look at the pricing of what stuff like it has traded for and what we think we could buy it for, make a price what we think we could buy it for, and present that in mailers to those people. And then they come back and say, yes, no, maybe so. And we do deals from there. So some of them say, how fast can you pay? We'll buy those up and go sell them on the markets for more. We'll look at them, we'll study them, we'll make them happen. So if you're interested in doing these kinds of mailers with me, let me know. Put contact information in the description below, and I can do, our partners and I, in one way or another, we can do the whole thing for you, or just hand it off to you and let you run with it, and you can do the whole thing yourself or some combination in between, depending on which parts of the ingredients of the equation you might need. And I can help and advise and coach and walk you through it. So Luke Smith, ruralvacantland.com, a little primer on doing mailers in this, what are we, hour, 20-minute video. Thanks for listening. Thanks for watching. Feel free to reach out anytime. See you in the next one. Bye.